Hey everyone, John Ender here from School of Trade. Today we're going to be taking a look at a wedge breakout here on the crude oil. Target's going to be down at 58.52. We're entered in short here at 58.93, and just looking for a little bit of an earlier entry here. I like an earlier entry in this case, just the way that it's setting up. It just looks like they didn't really want this to go higher and that they were trapping the highs. So the breakout buyers above the highs were trying to hop in here, and they're getting stopped out right now where we're entering in short. So let's get our stop in place here. Going to go to 24. Now, because of the size of the risk on this, can't really afford to go in much larger than one contract. You could take maybe two if you wanted, but you end up having to be a little bit more aggressive on the stop. Overall, the way that it's setting up is just picture perfect. You know, you've got a beautiful move on the way up right here, nice little channel low, but then in this case, we start making these little false highs, right? We can't get higher, and we just keep making those lower highs and lower highs and lower highs, and when it finally starts actually looking like an area of resistance, then you can clearly see this very, very easy to spot wedge. Now, typically with a wedge breakout, you'd want it to be in the direction of the overall move, the prevailing move on the way up. But the fact that they couldn't even come back up to even the secondary test up here, let alone the high test, we just keep making these lower highs and lower highs. They keep getting weaker and weaker, and every time the buyers step in, they really can't get it to go that far. And the sellers just look like they're getting more and more pressure to the downside. It just looks better to sell it. Now, this may just be a fake break and go right back up again, but it just looks way too good to be that, right? I mean, it's just breaking down too aggressively. Now, I like the little bit of an earlier entry. If you look at the candles themselves, we had this really weak bear candle up at the highs. That's not super convincing. And you got this little inside bar right here. Again, not super convincing, but it's looking a little bit better, right? And then you get this big move up. This wick goes all the way above that candle's high and then just dumps, right? We get this big old red candle. That's a big trap at the highs. I like everything about that. So I'm in short here, 58.93, looking for the target down to 58.52. And because we're entering in early and we're entering in pretty early in the move as well, I'm okay with leaving it at 58.52. You could try to front run it at 58.54 if you'd like, but I like 52 right now. It looks pretty solid, and that'll give us 41 ticks on the trade. So $410 on one contract if we can get this one hit. Now, this is a 5-minute chart, so it may take a little bit of time for us to actually get this move going. We're not too far past the open, and we are seeing that volume really start to kick in. So, you know, that part of things looks pretty good, but we just need to see that little bit of follow through. It is a good thing that we're breaking below that 58.79 previous swing as well. That's definitely a good sign. We'd really like to see us close below that. That'd be a pretty important thing, especially with as big of a candle as this is. Now, as we get, there you go. As we get this push lower here, you know, when we get nearer and nearer to this 58.52, we can look to lock in our stop. Really, based on the size of this candle, I'm going to lock my stop in above that. I really don't want to see prices come back at all, not on this candle. You know, normally you expect a breakout and then a pullback and then it falls off from there, but they're doing all of that in one candle. So because of that, I'm going to lock my stop in at 59.03. I'm not interested in risking any more than that. So we'll see if it wants to fall here. We're getting close. Might not even have to pause it too long based on what we're seeing so far, but I'll be back in a little bit, see if we can hit that 58.52. Hey, we're getting some nice continuing pressure to the downside here, breaking back down again. This little chunk of consolidation that we're stuck in right now, I'm going to lock my stop in above that. I don't want to see, I really don't want to see the highs of this big red candle get broken, which is at 79. So I'm going to go to 81 just to be safe. But everything else looking really, really nice. I think people are just kind of taking profit down here, this big spike lower. Looking for one, because, I mean, if they are taking profit here because of that, I would look to see maybe one more push lower that should get our target filled to 58.52. Probably go a little bit lower than that, honestly. But, you know, we'll be conservative and stay at 52. And here we go. One tick away. One tick away. Let's see if they have what it takes to push it lower. And there we go. Got it filled. Beautiful. Cancel the stop there. So we got the target filled, 58.52. Beautiful move down. $410 on the trade, 41 ticks. Only one contract just because of the size of the stop. Got to play it a little bit safe on that kind of move. But overall, picture perfect wedge pattern. You've got this beautiful triangle forming all morning. When it finally lets go, you get this big explosion to the downside. And can't ask for a much better setup than that. So that's going to be the trade. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.